2022 may have been a tough year. It's believed US households lost around $7 trillion in net worth this year alone. However, not every investment was down this year. Here are my top stocks that actually finished in the green. This again emphasizes why investors should be well diversified in order to spread the risk and decide the impact that any individual stock or ETF has in one's portfolio. We're going to leave all the negativity in the past and look forward with positivity in 2023. To start off with, we have Chubb, up 15.23% this past year. Chubb is an insurance company offering products such as property and casualty insurance, life and accident insurance, and is able to make money by charging premiums to its policyholders and investing the difference. As long as any day after tomorrow type situations don't happen, Chubb should continue to be a profitable company, and it's no wonder Warren Buffett has made so much of his fortune from insurance companies. Chubb is a very small position in my portfolio, and it brings me nearly $10 in dividends every year, though I have made a couple $100 in capital gains. Next up, we have Honeywell, up 3.63% during the year. Now, that might not sound like a lot, but remember the S&P 500 was down 20% this year, so that's nearly a 24% swing. Honeywell also had many peaks and valleys, so these offered even juicier returns if one invested at just the right buying opportunity. Honeywell is a diversified technology and manufacturing company, and it's hard to pinpoint what exactly they do because they provide so many goods and services, whether that's with aircraft, engines, security systems, gas, oil, production equipment, safety products, and defense technology, among many others. Now, one of my favorite activities to do in public is to examine fire alarms and see if they're made by Honeywell. You only get a few weird stares by people. Honeywell is bringing me $51.53 every year, and that should only continue to go up with yearly raises. Now, you've all heard of this next company, the recession-proof Pepsi, staying strong with a 4.4% increase since last year. Pepsi is a reliable company that brings in profits year after year to pay its shareholders in dividends even during tough times. Pepsi is so much more than the iconic soft drink. They also own Mountain Dew, Lay's, Gatorade, Tropicana, Quaker Oats in its impressive portfolio. Pepsi products are sold in 200 different countries, and that's allowed them to bring in $79 billion in revenues in 2021. Now, I'd like to receive a bigger piece of that pie, but for now they give me $55.20. Another fantastic company in 2022 was UnitedHealth Group, bringing me a 5.5% return, and the company is almost $500 billion in market cap. This is a company that has no signs of slowing down. UNH is a healthcare company providing many health insurance coverage options. They work with employee-sponsored health insurance, as well as individual and family plans, Medicare, and other government programs. This means they are a powerful force within the healthcare network of providers, networks, clinical services. UNH brought in nearly $300 billion in revenue last year. And as long as people keep going to the doctor, they will need health insurance. And UNH is a big player, quickly gaining a monopoly in this field, whether that's for better or for worse. UNH is sending me $48.91 in dividend checks every year. Shifting to another healthcare company, Abbvie powered through to return 19.34% this year. The large pharmaceutical company sells prescription drugs, which are needed for a wide variety of diseases and illnesses. Abbvie's top-selling drug, Humira, will lose its patent protection in 2023, which could seriously hurt Abbvie's revenues, but it seems like other drugs like Rinvoq and Skyrizi, they might be able to help step up and continue to bring in money for Abbvie. Only time will tell how Abbvie's free cash flow looks in the future, but right now they're sending me $87.17 every year. Black gold is oil. Oil prices have been high in 2022 and probably will be in 2023. But don't tell Shell, the company was up 27.58% this past year. And they also have a really strong starting dividend yield of now 4.3%. Shell makes tons of money extracting, refining, and distributing oil and gas products throughout the world. Big oil giants like Shell, they can have their stock price impacted by the demand for gas, production, exploration costs, political choices, competition, market trends, the investor sentiment of the future of oil, which I believe is actually quite strong. Oil is used in the production of many products and is much more than just what we fill our cars with. This includes oil being used to heat homes, producing electricity, creating plastics, among other numerous uses. Shell currently pays me $38.49, almost enough for one full tank of gas. Imagine having all of your trips to the gas station being covered by dividends one day. Now, I mentioned several different companies in different sectors. I put my eggs across several different baskets, and that's what's allowed me to have a few victories in 2022. I'm sure we're going to be having several winning baskets in 2023. Make sure you tell me your best performing stocks in the comments below, and touch that like button for the algorithm. Catch the videos in podcast form under the Clad Cash podcast name, and I'm out.